Morning, traders. Good morning. Good morning. Happy new week on a Monday bank holiday in the UK, in the US as well. So we're gonna have some interesting markets today. We're gonna have probably some quieter markets than normal, but we're gonna be having a conversation around how to get funded in trading. Quite a big topic that a lot of traders coming into this space are sold on the idea of, hey, if I can just get funded, everything's going to work out and it's going to be absolutely a-okay. We're going to be jumping into that a little bit later, but for now, I'm your host, Rich, joined by David all the way from the UK, all the way from the US. I almost got through the intro without messing something up, but not quite. David, how's your weekend been?
The weekend has been absolutely amazing. I've looked out here in my part of the U.S. We've had wonderful weather for the most part this weekend. Little spats of rain here and there, but for the most part, pretty sunny. Low on the wind speeds. So yeah, I was able to kind of get out there, take advantage of the weather. We got an extra day into the weekend this weekend. In terms of the trading weekend, although I'm here with you early on a Monday morning. But yeah, I'm very interested to have the conversation about how to get funded and then what do we do with our time? I know we always kind of talk about the idea of what do we do to budget our time and do it wisely, but you have to take advantage of those non-trading days in order to really, really, really be able to leverage the opportunities that may come about on days when the market is a bit more active. So, I wouldn't necessarily waste a stay away unless it's kind of one of those things that's kind of built into your recovery plan. We always talk about self-care and doing those things. So interested to have the conversation today. Happy to join you guys on a very super quiet non-market day here in the US.
When you jumped in, interestingly, and you said the weather wasn't, it wasn't too breezy. I was able to sort of get out and take advantage of that. Now, for those of you that don't know, David is a professional flyer. He doesn't talk about it much on stream. Is this what you were referencing? Did you get out over the weekend and just head up towards the clouds?
No flights this weekend. No,
okay.
It was more about just my feet remained on Mother Earth, but it was really more about just being able to get out there, enjoy the weather. And again, so unless you're trading outdoors, right, you're pretty much going to be indoors when you're looking at these markets. I do have a window in my office that's like literally within arm's reach here, so I can always like roll up the window, get a little bit of a breeze in, smell the outside, smell the fresh cut grass, all those cliche things. But realistically, it's like for me, like one of the things I've been focused on this year is really just trying to balance my life outside of trading with my life, when I'm like staring at the charts, looking at the charts, executing those trades, because I think that balance really helps in terms of making sure that you're centered emotionally on being able to execute those trades, being able to deal with losers, that sort of thing, and being able to disassociate yourself from what's happening in your trade execution on it from an emotional standpoint. So no, I'm really I do enjoy the weekends as much as I enjoy the week. So as much as I love trading, I love being not in front of my desk and outside, especially when it's nice out in the wintertime. Really hard to enjoy that unless I have some sort of winter sport activity like I do enjoy ice skating. It's one of the things that I do enjoy. As being somebody from for those that aren't familiar, I'm from the upper Midwest, which is a very cold region of the US, more akin to like Canadian winters, although not necessarily as cold, but pretty cold. And winter sports tend to be a bigger deal where I'm from, versus the vast majority of the US that doesn't really participate in winter sports. So I do like ice skating and stuff like that. But the springs, summers, and most especially the fall for me, like I do like being able to be outside and being a part of the outdoor environment. So I just like the balance of being able to do just both things, both being in front of the charts and then making sure that I'm leveraging the time off. So yeah, I went to like a festival over the weekend. Did a bunch of housework. The rest of the day, Saturday into the day yesterday. And I think today, realistically, because the markets are going to be just super, super quiet, once I have this conversation with all of you in terms of like how to get funded and what to do with our time off, I'm really just going to make sure that I have a really, really good trading plan for the week that I've got. I tend to have, a long scenario and a short scenario. And I think on days like Friday, everybody was kind of thinking long after NVIDIA earnings here in the US, and the market really just kind of didn't necessarily perform that way. So it's easy to pivot when you have a plan for both. So that's really what I'm looking to do with my days, make sure that my week is set up and I get an extra day to do that.
Yeah, there's a question that comes after how to get funded. I wonder if chat can get it. So how to get funded? It's a big topic. I'm not going to dive into it right now, but I'm just curious, what comes after how to get funded? There's something far more important than how to get funded, in my personal opinion. I'll be curious to see what chat can come up with that. Let's see who we got in chat this morning. Musley, first in chat. Good morning, all around the world. Quote of the day: "It's not what we do once." Hang on, it's not. My brain's still trying to wake up on a Monday morning. Quote of the day: "It's not what we do once in a while that shapes our lives, is what we do consistently." I like that. I like that. So let's talk about consistency first and foremost. Who did their weekly review? Who just switched off from trading and said, you know what? Weekends are for life balance. I'm not gonna do anything trading related. Who did their weekly review? Who left their weekly review? Who doesn't have a weekly review? Tell us in chat what you got up to over the weekend. Be curious to hear about it. Myself, pretty quiet one. Little bit of work on a Saturday, and then Sunday was just a chilled social one. I didn't do my weekly review. I know I should have. I didn't. So today I'm going to be spending that kind of. Today's not an official work day for me. It's just kind of like technically I'm working, but technically I'm kind of not. Like in my head, I've still got the day off. So I know that I've got this list of things I've got to do. One of them is the weekly review. So I will be playing around with that in a little while later on. That was a big sigh. There's a lot of energy that's going to have to be built up to try and get into this. I'm I'm still not feeling it. Maybe I don't want to look and see what happened last week. I think I know last week I was a little bit kind of off plan at times, and I know that when I'm off plan, they're the hardest reviews to do because I've got to figure out the reason why. And then as a part of kind of holding myself to that standard, I've got to come up with the action step that makes me fix the reason why I was off my plan. And that's not always easy. Sometimes that takes quite a good bit of effort. Morning, Steve, and morning, Marsha, as well. Andrew's in chat. Graham, good morning. Trading Zillow, good morning. Ron's in chat. Charlotte's in chat. We got a good turnout for a Monday morning for a live stream. It's going to be a little bit quieter. We will pull up the charts. We will run through the heat map, see what's moving. We'll run through the news calendar, and we'll see if we can cash some trades in the first sort of hour or so of the market. But probably looking at the market right now, it's simply just a quiet ranging market. So it's going to be a quiet one. And last and not just moving to the name. Rich, all round, good morning, one and all, from a sunny Essex with blue skies and a very light scattered shower A very light scattering of cloud. That's your weather forecast for this bank holiday Monday, Rich. Love it. Absolutely love it. We've got no blue skies over the southeast. We are just overcast. So this is the start of something new. So it is day 56 of my plank challenge. I'm up to 4 minutes 50 seconds. I'm going for 5 minutes. I've only got 3 more days left. And this week I will be hitting 6,000 steps every single day. Going to try and keep that life balance that David was talking about, getting away from the charts occasionally and just getting out for a casual 3 mile walk. It should take me an hour a day. If I can't get up off my butt and get onto my feet for an hour a day, I'm doing something wrong. And that wrong is probably going to affect my trading and not for the positive as well. David, do you keep a step counter? Do you keep a log on sort of how much you move around?
Right on this thing, absolutely.
Oh, fancy.
10, yeah, minimum of 10,000 a day is what I do. So I've
I just realized what I did. David has a long history in the army, and there's me going, trying to get about 6,000 steps a day, like that's some big achievement. And David just gives me that death stare.
yeah, no, I think it's important. I really do think it's important. Trading is a very sedentary lifestyle, right? If all you did was sit in front of the desk, and anybody that's been around and has gotten to know me a little bit also knows that I love my computer games, right? So everything that I like to do is really in front of the desk for the most part. And you really have to balance that out. Again, that physical health is kind of one of those components to overall trading fitness. And I know Aaron's a big proponent of it. He likes his workouts as well. So yeah, so it's a minimum of 10,000 steps for me. I typically, so when I join you guys here, I don't have the opportunity to necessarily work out because I don't want to be that person that's at the gym at 2 o'clock in the morning my time. So I will go work out after this, especially on a day like today. I've got the whole day to do whatever the heck I want. I'm not feeling any kind of rushed. So I will go work out after this, typically about 5 o'clock in the morning my time. I would say, and then on Tuesdays and Thursdays when we're filming and recording and streaming, not buying this, I will typically go for a small cardio workout prior to, and then I'll get ready and do the stream, and then I'll do something in the afternoon. Absolutely, for sure. But yeah, 10,000 steps is usually my minimum in terms of activity. And yeah, absolutely. And I use that as a way to kind of maintain some sort of accountability. It's one of those things, like if you get up every morning and you tell yourself you're going to make your bed, right? And you always make your bed, and you honor yourself by doing that one thing that you've committed to, and it's a very simple step that you can take. At the end of the day, if you messed up the rest of your day, if everything in the rest of your day went bad, you didn't do anything you were going to do, your diet went haywire, you didn't exercise, you didn't do all these things that you told yourself you were going to do, but you come back and the first thing you did and you told yourself was you were going to make your bed, and you came back and guess what? You accomplished that, you made your bed, then you feel like a winner going to bed because you made your bed. So it's like one of those things, like I just look at the little activities that I do and say, okay, I'm not going to hit all my goals, right? If I have a list of things and I hit absolutely all of them 100%, then I feel like my goals weren't necessarily like high enough. So typically it's 10,000 steps. Yes, I typically achieve that, but that's not necessarily the goal that my overarching goal for the day. On days like today, I'm probably going to hit all my goals because it's not going to be a very active day. But like, once the market opens up, I'm always kind of like trying to get to those points. But like, I think that in terms of why I ask myself to do more is because you push yourself. And if you're trying to reach the moon and you get halfway there, you're still halfway to the moon. So it's like one of those things where I'm
Yeah.
trying to like engineer it to where I'm always putting out that little bit of extra effort. I do have to be careful nowadays because my body ain't what it used to be, right? So I can't get out there, and I don't recover as quickly, and I don't, you have to understand where you're at in the age diorama. So how I achieve those 10,000 steps does take me a little bit longer nowadays, and it isn't as intensive of a activity or exercise that I used to do because I can't necessarily recover in the way that I used to. but I love the idea of challenging myself mentally, and one of those ways is through physical exercise because most of the running is mental, anyways.
David, I'd love to be able to relate, but unfortunately, I'm not able to. Being a young man of 21 years old myself, obviously, I know nothing about how long it takes for the body to recover. So I'll tell you a little mental hack actually on that subject. So David was talking about making the bed earlier on in the day. Now, it slips my mind. He's a neuroscientist, shares a lot of content on YouTube. I want to say, nah, not Ed. It will come to my mind. If you know it in chat, give us a heads up and shout it. Now, he was talking about how if you start the day with the idea of, I've got to clean the entire house today, you're overwhelmed. It's a big task. It's like going to the gym and saying, hey, I'm going to deadlift 200 kilo or I'm going to run 10 miles. It's like you build up to it. So a really good mental hack, and I've actually been using this for the last 2 years, is if you make your bed at the start of the day, it takes you 10 seconds. You get this small dopamine release because you've achieved something. Just a tiny thing. Now, when you get dopamine causes motivation. So then what you can do is you say, okay, I'm going to get dressed. Not just like dress, like chuck on a pair of shorts and a t-shirt. I'm going to get properly dressed. I'm going to put on a pair of socks as well. Get a little bit of dopamine release. That means if someone knocks on the door, you're ready to answer it. I'm going to go and get washed, brushed, and dressed. Takes 10 minutes. Next thing. And what you do is if you set the first half an hour a day to achieving 4 or 5 or 6 small goals, they're like the warm-up reps in the gym. You need almost no motivation to do each one of these. And each task you complete, you get a tiny little bit of satisfaction and achievement, and it motivates you just a little bit more. Before you know it, half an hour later, you've already achieved 5 or 6 things. You've got yourself ready for the day. You're feeling pretty good about the day, and now you're ready to take on some of those bigger tasks. It's like the warm-up reps in the gym before you go into the heavy lifting. And if I do it that way, it's I've actually found it always just never lack motivation, never lack discipline. But it's bugging me. I can picture his face. He's a fantastic YouTuber that does loads of stuff around sort of how the mind works. And what I did, he suggested create a feedback mechanism. So every time you achieve a task, do something physical. So what I do, and I've spoke about it before, is I have two little jars and they have stones in them. And I take one stone out of one jar and put it in the other. And my job is to move the stones from one jar to the other throughout the entire day. And there's about 25 stones in there. Now, if I do that, I get 25 feedback mechanisms of, hey, I did something. I did something for me. I did something for the household. It's nicer. It's cleaner. I feel, more dressed. And before you know it, you're playing this mini game with yourself. I've moved 14 little pebbles from one jar to another. I feel great. And you're halfway through your back testing and your weekly review, and you're so inspired to get it finished so you can move one of these little pebbles. It's like that snowball effect. And it starts from just the smallest of tasks of make your bed. And that's sort of one way that you can get your mind working with you. Because there's nothing worse than you wake up and your mind goes, can't be bothered to do anything today. And you've got to wade through and drag that baggage through the entire day to try and get yourself motivated. I heard someone else say it's like your left hand is trying to punch you in the face constantly, and your right hand is just spending all its energy holding that left hand and stopping it from basically sabotaging you. So if you can get your left hand and your right hand, and you can get your mind and your body in gear and all working towards the same goal, you'll be surprised what you can do. And that comes sort of full circle back to the quote of the day about consistency. You don't need to gain 10% of your account in a day. You don't need to gain 10% of your body mass in a day. You don't need to achieve 10% of your life goals in a day. If you could do just 0.1% or 0.01% and compound that over time through good behaviors and strong processes, you'll be in a fantastic position. Good morning, Yanis. I see that you've hopped in chat. How's your week been? You just joined us on the back of talking about how to engineer the mind to be a little bit more productive and release small dopamine through feedback mechanisms. I don't know how we got into this on a Monday morning. Why don't we pull up the news calendar instead and get into something a bit lighter?
Let's do it. Yeah, absolutely. Yeah. Well, it's quiet in the markets, and that's probably why we're
Mm.
talking about this. But it is important to talk about because it's the
Yeah.
stuff that others don't really hit on. They just hit on, oh, look at this massive trade I placed. Well, what about all the losers you took before that? Well, let's not talk about those. You stashed them away in a
Yeah.
different closet.
I think the reason I can talk about that stuff with kind of the passion of sharing my experience in it is because it's I've seen the growth and compounded effect of having great routines and great processes. I've seen what that's like over time. And I've also been a massive procrastinator for many, many years of my life where I would just put off tasks and daydream about doing the task, getting that kind of dopamine rush by daydream about it and actually not doing it. And then I was like, okay, how can I physically get out of that state and start doing the tasks that are going to take that are going to shape and change my life? And it's not thinking about the gym that changes you, it's the going to the gym. And they're very,
Yeah.
very different things between physically doing it and then just thinking about it. So for me, it was, I want to say Ed Miliband, but I don't think he does mini days. He talks about how to take a day from 24 hours and who's to say a day is 24 hours? Day's what you call it. Why don't you call it 6 hours? He said, now you get 4 days
Four
in your
days
life.
for every one
One.
day. It's so
Yeah.
hilarious. I don't know if you've ever watched Seinfeld, but Kramer, a character on there, he's like the eccentric next door neighbor. He actually does this thing where he's like, I've increased my productivity because I don't sleep all night. I sleep, two or like 4 2-hour sessions because I have like 3 days in one day or whatever. And he's going through this thing, but then it ended up messing up his sleep cycle. But it's kind of hilarious to kind of break it up like that. I think regardless of the methodology, if you find something that works in order to just kind of like compartmentalize your day or compartmentalize the tasks or the to-do list or what have you in order to just kind of do what you're supposed to be doing or do most of what you're supposed to be doing in the first place, then I think you're absolutely worlds ahead. And we always talk about just and then being honest with yourself in that process and making sure that you're honoring yourself by holding yourself accountable and making sure that you're following through on the things that you tell yourself you're going to do. Those goals should be realistic, right? You're like, I'm going to double my account in 2.5 minutes. Like, yeah, let's not get carried away, right? But taking those incremental steps towards making sure that you're honoring yourself by holding yourself accountable by, I don't know, doing your weekly review is one of those things that you could do to help yourself out. And then being honest with yourself and like, you know what, I just didn't take time to do it. But I realize that now I'll go back and get that done and make sure that I'm doing a deep dive because when I do conduct my weekly review, and I'm honest with myself with my weekly review. That teaches me, yes, behaviors that did pay off, but more so behaviors to avoid and things
Mhm.
to avoid, and why I need to avoid those things to make sure that I don't, that I'm less likely to repeat those mistakes because left to my own devices. If I would say 99.99% of us, if we're trying to trade and we're trading off our own like whim and just not holding ourselves accountable, we're going to be not traders for long. So we have to make sure that we do those things so that we could be traders for
Wait,
longer.
David, I got a question. I got to ask you. It's burning, and I don't know how to word it, so I'm going to do my best to get it across so you understand what I'm trying to ask. Would you say that more traders have more? Oh, I know what I'm trying to ask. It's such a hard question to ask. Would you say that more traders have more bad traits? So the average trader, do they have more bad traits pulling them down than the things they need to address that could make them slightly more profitable? So if we had a cut and it was 50-50, on one side are right, I need to do this better. I need to do this better. If I can just hold my trades longer, if I can just risk a bit more, we've got all the things that we know we do well that we're trying to do a little bit better, but we've got all the things that are dragging us down. That if we just cut those out, do you think that would make more of a change than trying to do the things that we do well?
I would
I can't
say
word it.
no. I think I understand what you're saying. Like, are the things that are holding us back are those are those more of a detriment than being better at the things we do well?
Yes, that's what I was. That's
Okay.
exactly what I said. I can't believe you didn't hear me correctly.
So that's awesome. No, I understood you perfectly. I think it's
Oh,
because we've been hanging out the past 6 months. No, so I would say, in my opinion, it's the stuff that you're terrible at that's holding you back more so than the stuff you do
okay.
well. And doing that stuff better because it's like, okay, for example, if I execute a trade and it's based off of a strategy that's repeatable and all those things are great and you execute that, that's one thing. But usually what happens is we hold a terrible trade for longer than we hold a good trade. We tend to over leverage our accounts more so than leveraging the account correctly so that we can hold the trade based off strategy to its to its correct fruition. Right now, where to place stop loss and all that stuff, we can, we can dissect that thing like all day, right? In terms of like the specific strategy. At the end of the day, regardless if I have a specific strategy or you have a specific strategy, you have to honor that portion of it. But what we tend to do are the bad things around it, and that is what makes things worse, more so than what we're doing right. It used to be before that I didn't even know I was over leveraged, right? In a trade. I would just be in a trade and I'd be like, yeah, absolutely. And then all of a sudden I'd just be like, oh, that lost, but like that lost more. But like when I went back and looked at my trades, if I was having just kind of a bad week or a bad couple days, I'm like, what am I doing here? And it's like, oh, I'm over leveraged in these trades. I'm caught offside in a position. And even if the position would have went in my favor, it was like a negative R trade, or I would have had to execute it multiple times based off of whatever parameter. So I would say the things that we do bad hold us back more so than doing the things we do well more. But I do think it's important to identify the two buckets of issues, right? Okay, here's what I need to do better that can help my trading be even better. And here are behaviors and or traits that I need to minimize and or eliminate to make sure that I can become profitable. I think the bad bucket is more uh, that's a bigger problem than what we're doing well
Yeah. So
for
if we want
most
to grow as
traders.
a trader, that's where we want to turn our attention. So I guess kind of, and I always come back to this analogy, but it's quite an easy one to pick a reference from. The gym analogy, you can't out-train a bad diet. And so if you were going to the gym and you're saying, hey, maybe I'm just going to run another quarter of a mile and push that much harder into the good work I'm doing. Actually, maybe the results you'll get will be far better if you look at the kitchen at home and say, actually, I'm going to cut out that takeaway every 2 days, or I'm going to cut away this. I've got to reference it. Abe, good morning. I see you put, I entered my 30s with better finances, but way fatter. I'm becoming Penguin from Batman. There's a psychology coach on YouTube called Pat. Fantastic stuff he puts out, and he talks about how, as traders, we want to be lean. And as we start sort of gaining money, as we start getting a little bit more traction financially, this is my interpretation of it, we start getting fatter, we start getting slower, and rather than being the predator that's hunting and very, very nimble, we start to become the prey because we become lazy, we become lethargic, we become slower in our mental state, our physical states. And then what happens is we can't outrun the predators, and then we get hunted because we've got all this extra meat on us and we can't defend ourselves. And I think the metaphor talks into kind of how we hold ourselves in our personal lives and our trading lives as well. And this is why I think the traders that I really aspire to be like are those. It's not about how much money they've made. It's actually those that have achieved something good and they're still driving forward. They're still pushing. So we spoke about earlier how to get a funded account. We're gonna have a conversation on this shortly. But more than that, how do you hold on to a funding account? And getting a funded account is just kind of that first step. There are so many steps after that. And I think when we sort of kind of look at the funding account and achieving that as being our end goal, then all of a sudden we can drop our processes. Hey, I'm funded now. I'm where I want to be. I can do whatever I want. I've got loads of time. No time limits here. No, I've got all the money in the world. I've got different trading rules, all that kind of stuff. The problem is that's not how you got funded. So can you imagine a bodybuilder building and prepping towards his show? He gets towards that state, and then afterwards he goes, "Well, I've competed now." And he just lets go of all the processes. He goes, "Well, this is me now. This is my final form." You're only going to keep that if you keep practicing and building your psychology and your risk management, your trading strategies, constantly studying and developing in the market. And I think one of the best ways to do that is actually through life balance in itself. So, good morning, Abe. I just wanted to reference that. um, becoming way fatter. And is it from a state of comfort? Because it's one of two things in my mind. It's either hey, kind of getting to where I want to be, I get a bit comfortable, or actually it's stress, it's life, and then we sort of comfort eat because of that. I've done both. That's how I've got
Yeah, I was
this
gonna say
beautiful
I've been a
dad.
victim of both. That's for doggone sure. And if you like, I don't care. Now, I really don't want. So I'll reference M and M's. Maybe M and M's aren't necessarily controversial because Oreos are apparently controversial. Either way, I like both. And we'll participate in eating both. And I will either I'll eat them whether I'm happy or I'll eat them whether I'm stressed. It's just one of those things. So I don't keep those things in the house on a very consistent basis. And if I have them, it's a small package.
My bad. I fat fingered the button on my mic. So I'll tell you what we're going to do. We're gonna take a quick break. We're going to have a look at the news calendar when we come back. We're going to look at the heat maps. We're going to dive into the charts. We're going to see if we can find anything that's moving today, possibly not. And then we're going to dive into the meat of this, and we're going to talk about how to get funded. I have been on this journey many, many years, and I can tell you, if there's a technique out there that I don't know, I'll be surprised. So let's have a conversation around that in a sec. We'll be back in a minute.
Entrance music. He's got his entrance music.
I just gotta remember what I was talking about. Now they're firing it.
One
No,
ring, 16th of a pip.
no.
So
Right. Listen, fellas, live some calories.
Hey, all right. We're gonna have some fun here on the stream for sure.
Right, let's go ahead and pull up the news calendar just so we can see what we're looking at for the week. At the moment, we know it's bank holiday in the UK, and it is Memorial Day in the US. Memorial Day.
It is Memorial Day, yes, as compared to Veterans Day. So it's a bit more of a reflective holiday versus a celebratory holiday for veterans. So, but yeah, it's a pretty quiet. Markets are closed here in the U.S. A lot of people, there'll be some ceremonies and such, in terms of Memorial Day observance, but most people are going to be camping out, grilling out, doing that sort of thing, as we get into the midday, early afternoon.
Yeah, I trade GU and EU. So today the markets are I don't think they're gonna move at all.
Yeah. I mean, I trade US markets and I'm like, okay, the market's closed here. All right. Well, just take the free day off. Take the win. Look at the rest of the calendar for the week and see what we got going on. We are in the last end of the May portion of the calendar. We're starting to get into June, so tail end of earnings season for sure. But realistically, we're starting to get into some of those pivotal moments that are probably going to move some currencies around. Talking about Fed funds, decisions, Fed rate decisions. This was kind of, I think we've kicked the can down the road on rate cuts, but there might be a surprise in the statement coming up, this month. So you're starting that reset, right? CPI, PPI, all those things are going to start coming about again. Those reports for June. So it's just a calm before the storm, I think.
Yeah, I think it's. I think this week's just going to be well. Tomorrow we've got CV consumer confidence, but I have a theory that the market is pretty weak on the USD right now. We've got GBP getting close to 128. I think we're going to see. I think we'll see some dollar strength. That's what I'm anticipating this week. I think the markets have been just kind of slowly moving around, in an okay manner, and I think. You ever get that feeling where you feel it's due a big drive in one direction and it's just going to keep going and it's not going to look back and it's going to do it with no news kind of forecasted and it's going to catch every trader offside. They're going to keep trying to buy the bottoms. I don't know if that's because I'm sort of conscious, hey, things are going okay. Maybe the market's going to shift gears, but I think that's the move that would be the unexpected move in price action for the market to start running sort of 150 pips. So I'm going to be conscious that might be the move we see this week. Unemployment rates as well. Unemployment claims, sorry, coming in on Thursday for the USD. So although
that's barring any again, we've had the conversation over time where our sensibilities and then what the market's been doing and the information that we have haven't all necessarily kind of matched up, in our heads and what we've seen. I think the most obvious trade, if you're a US based trader and you were trading US markets, whether it's equities or futures, you're like, okay, Nvidia posted earnings, they performed really well, blah, 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 blah. Just blindly buy the market and then off you go. And that's not really the way that the market necessarily reacted. You got the reaction pre earnings, and then you got the earnings reaction specific to that equity. But now we're getting into that season where the other thing is it will get some volatility, but it'll be like quick spurts. The volume's going to be down in the markets this summer as less, like, the weather's getting nice. People are going to be out, doing things and not necessarily as high in the market. So this next quarter in the markets is like the low volume quarter of all the quarters. So you're really going to have to, what I've discovered with my summer trading is that I have to be very, very patient and then pounce on those opportunities when they do exist, and just be ready to do that, because they're just, I'm not going to say far and few between. It's just not necessarily as active as the fall trading season, and into the winter. So, this year, seasonality in terms of like sell in May, go away, right? Hasn't necessarily played out. We've seen the market continue to bid up here in the US. Most markets globally have kind of bid up a little bit, and so we were kind of seeing that. And we've seen these currency pairs off a dollar weakness kind of perform really well against the dollar, whether it's the pound or the euro. You've seen kind of an uptick in that, kind of reversing that trend a little bit that we were seeing kind of going into this past few weeks. But keeping an eye out for what you said, right, is I think none of the baseline conditions that showed the previous dollar strength have really changed, right? Like whether it's geopolitical or otherwise, we haven't seen numbers that point to necessarily the dollar, losing a bunch of steam and continuing to lose steam. So, keeping an eye out for the unexpected is probably a good way to approach it. So yeah, Rich, you're a genius. That's what I'm saying.
I wouldn't go as far as say genius. Have we got eyes on the heat map? I'm curious to see how that actually looks for that. I can look at the price action; it's very, very flat. But what's the heat map actually telling us about the market? If we got anything over probably a 0.2 move, I'll be interested in.
Well, anything over a 0.2 move, you're talking about, again, strength in the Aussie dollar, strength in the New Zealand dollar, and you're talking about strength in the yen a little bit, and the HKD. Those are your pockets of strength. Everything else is kind of Swiss franc looking a little bit weak, but everything else is just kind of muted or pretty close to doggone flat. If you're looking for something that's closest to the 0.2% move in there, you're going to be, I'm thinking, Aussie dollars against Chinese yuan is probably the biggest, and then New Zealand dollar, same thing, showing a lot of strength against China right now. Everything else is just really, really, really close to flat against each other, unless it involves those two pairs over in Jordan's neck of the woods.
Okay, well, I'm not going to be trading AU or NU today, regardless of any amount of strength they're showing. I got bitten by New Zealand dollar previously when I tried getting involved in that. So we did manage to come out of it. I want to say we managed to come out of it profitable, but it's because I kind of used other trades to sort of skim away from it. So what do we say we pull up the charts? We have a look, we get an idea of this wonderful market today and just how much it's moving and how many opportunities we may potentially not find. And then we're going to dive into the topic of today, which is really how do we pass challenge accounts? I'm going to save that for a minute. When I get talking about that, Dave, you're going to have to interrupt me because there is a wealth of experience in that area, and a lot of stuff I can't wait to pick some ideas out of our audience about, because there is many different ways of going about it. Graham said in chat, how to keep a funded account? Simple. You don't trade it. You don't trade it. You don't make money on it. Why do you want to get a funded account and stop trading it? let's have a quick run through of what we saw late last week. So this is how I mark up my charts. My personal terminals will look very, very close to this. So I'm marking out the higher the session, I'm marking out the lower the session, and then I'm just looking at a reference of how far prices moved, how long it took to move, and then we can see that the market decided to drive higher. Now I had this zone marked out here. If we look at the hourly, we can see it was this beautiful high before the market sold off. And I was looking at all this selling pressure. And I said, I think there's a hard opportunity for the market to push through this. So I'm anticipating the market to typically come into this zone and pull back or move away from it. Now, that's not what happened. And late on Friday, I was caught shorting this just as the market started to run into this price point. So managed to catch a little bit of a move just on this rejection here. Ended up getting back in and holding through all this chop. And at the end of it, I managed to close at a very, very, very small loss. And I was doing exactly the same on GU, and GU decided to just drive and drive and drive. So this is similar kind of price point here, and then the market went higher. And finally, the market breathed just a little bit, just down enough here, which gave me an opportunity to come out of the market. I think a small gain on GU, and that was this. If we look at this zone up here, same kind of thing. I've jumped to the hourly so you can see it. Same kind of thing, just looking at these highs and saying, look, right at the end of the week, I don't think the market's going to push past these highs. So I had this zone up here and I was looking to sort of just sell as the market approached back into it. And this is where not following your processes can get you in trouble, because if you sell early, which I may or may not have done, you might end up selling down here or even here, and then you don't get an opportunity to do anything with your trade. Knowing it was bank holiday Monday, last thing I wanted to do is come into Monday holding drawdown from Friday. So it was easier for me to take a small loss late on the Friday and then get out of it. But I did manage to catch this beautiful little short trade in this same leg here on the DAX as well. So nice little opportunity where I was able to use a little bit of them profits to pay for the EU and GU. But that's kind of same approach that we did with New Zealand USD, which never really found the selling interest, unfortunately. But trading is a probabilities game. This way we don't put too many eggs in one basket, and we use risk management. So quick top-down analysis. Let us know in chat if you're trading today. If you are, or there's a pair you want us to have a look at, let us know. If not, I'll do a quick top-down on GU and EU, and then we'll get into the topic of how to get funded, how to stay funded, how to keep it, and how to make it work for you. That's what we're all, well, I say that's what we're all interested in. That's what I'm interested in. And I should imagine most
I'm like, there might be somebody out there who's just
wants to
looking
lose.
to be charitable, who just wants to lose and doesn't really want to maintain their trading account and just lives to be frustrated by markets. And yeah, that's just what they want. If you're out there, you need help. Like that's not I'm sorry, that's not going to work out for very long. But yeah, no, I certainly, you talk about wanting to find ways to be successful and maintain that success and find ways to do it. And truth be told, we'll talk about this, but it's not going to be sunshine and rainbows in terms of like how you envision it and why you envision it that way. And we're gonna talk. Some of it will be cliche, and some of it will be, from a purely technical standpoint. And I think that there's a balance to finding ways to run your business, right? I would basically base. Now, all of my experiences are American, so they're a little very unique to this, but I'll call it like this: achieving passing a funded trading challenge is akin to graduating high school. You get a certificate, but it's not good for much. You really have to go on to university. You got to go on to college. And that's where the hard work really starts. That's where you start to grow up and really just start to, you're participating in the world as an adult, and you're having to kind of work your way through that. And now you start as a funded trader, right? Now you're starting to say, okay, I've got a funded account. How do I take these behaviors and continue to do it? If you were doing your homework in high school and getting good grades, right? And then all of a sudden you go to college and you quit doing your homework and you're going to all these parties and you're drinking and you're doing all this stuff and you're not necessarily exhibiting the behaviors that you exhibited in high school, or you're going to fail out of college, right? and you're going to pay a heavy price for it, right? And it's very much the same thing, like metaphorically, right? Speaking, in the same thing. Like if you graduate and have a funded account and you don't do the things that got you there, you're doing the opposite behavior because you just think you got life figured out. And then all of a sudden you just like you do it again. Like, you have to nurture these things. If you care about them, you have to nurture them and make sure that they're there for you. Now, I'm at a place in my individual trading where I have layers to my trading. What I mean by that, my like a challenge account isn't the only thing I got cracking, right? And so I have things that round out everything so that there's different levels of risk that I apply to different things, but overall the level of risk is the same. It's not, on a daily basis, I'm risking less than 1% of my net worth to do things. And that's all I'm going to risk in order to do things. I'm not necessarily, but that might be risked higher in this trading account or a different trading account or in this strategy versus a different strategy. But I'm not going to risk more than 1% of my net worth in order to do that. If the only thing you have going on in your account is your trading account, then you have to take that into account. But that has to fit within your kind of like your strategy. That has to fit it does have to make sense. If you're a terrible trader, I probably wouldn't be risking 1% of your net worth or 1% of your account per execution, because that really says that you have to be right on that one execution. And if your data says your hit rate is less than 50%, then you're going to have a 50% opportunity to be right on that trade. So you really have to balance out those two things. So like you have to take an aggregate of all of your activities and make sure that those activities are risked appropriately over time. That's something I didn't know before. I didn't know that before, where I would just be like, I heard it, but how do I put that into practice, and how do I put that in the terms where because I've designed it a little bit different for me personally, I don't have to be 1% right on one execution. If 50% of my executions on a day on different, whether it's my portfolio or it's just my trades, if 50% of them are right and 50% of them are wrong, I'm pretty much flat on the day, and that's not where I want to be, but it's okay.
Yeah, if you have a high win rate trading, in my opinion, I've had a high win rate, I've had a low win rate, and it's by design. It's typical. Like if I'm aiming for bigger take profits, I'm going to have a lower win rate. It's logical. I would hope that everyone in chat can agree that if you have a lower risk to reward, your win rate as a byproduct will be higher. So if we look at this trade, for example, I pulled the trigger on GU as a short, just a couple of sneaky little orders to get in, and I've got my stop up on this 4-hour high, right up here. Now, I'm not looking for the market to potentially drive all the way down here or all the way down here. Now, if I was, I'm probably going to lose a whole lot more than I win as a percentage. So that means I risk $1,000 and I might have a 30% win rate. But when I win, I'm probably going to make $3,000, $4,000, $5,000. So what I would rather is if we look at this trade now, we can see we're round about break even. I got one order here. The market's just wicked up, filled this other order. Now, if the market just moves maybe just down to this low, 7 pips times 2, because I've got 2 orders in, it'd be $140. I'm risking $500. Maybe I'll make 140. Maybe. Now, my win rate has to be higher for me to be a break-even trader. It has to be probably 70%, 75%, something like that. And I can tell you, it's a whole lot easier to get up for work the next day if you had a good result the previous day, the previous week, and the previous month. This is why I like smaller risk to reward. This is why I like negative risk to reward. Now we're going to get into the juice of it. How does that apply in a funded account? Having a high win rate, but typically kind of taking 0.2, 0.3% out of the market when you're risking 1%. Getting a loss of 1%, wiping out 3 winners, 4 winners, 5 winners, dealing with FOMO, dealing with revenge trading. How do we navigate all that stuff? So first of all, I'd like to find out where are we at kind of within our within our audience. Are you a funded trader? Are you working towards being a funded trader? Do you have no idea of what a funded trader is? Are you new to sort of trading? Do you not know what prop firms are? Give us a little bit of feedback so we kind of know where to take this conversation. Are you in your phase two, phase one? Have you passed blown up accounts? I'm curious to see where we are within our trading at the moment. Because last thing I want to do is say, hey, this is how I pass challenge accounts. And then everyone's like, yeah, Rich, I've been doing that like 2 years. I've, I'm funded already and what have you. So I've probably been funded, I want to say close to 12 times. And I'm guessing, I would like to say about 12 times I've been a funded trader. And I would like to say that maybe three of those companies that I was funded with, they're no longer in business. They're no longer trading. Um, but I'm curious, who we got in chat who's funded? So Stephen's on a phase three in a bootcamp account. Congratulations, that's awesome. That's close to passing the equivalent of two phase two typical challenge accounts. Having a small cash account too. Nice. Blown my funded account twice, says Johnson. Looking forward to getting a funded account. Sounds interesting. Okay. Okay. Also on my third attempt at passing an evaluation as well. So first and foremost, when I'm taking a challenge account, I'm only risking something that I can afford to lose. I'm not trying to take on a $200,000 challenge account or a $100,000 challenge account if losing that is going to cause me to be emotional. If losing that is going to make me go, I suck at trading, I've just lost $500 or $1,000. I don't want to put myself in that position. Trading for me is so important to be neutral emotionally. And how I do that is I trade small accounts. And a small account could be a $100,000 account to you if you have enough money. But most traders don't have enough money and they don't have the track record to support that they should be doing it. So if we were to start right on a $5,000 account, typical challenge account, costs about $40 to buy. If I lose a $5,000 account, I've lost $5,000 account before in the past, and I went, oh, okay, that was a cheap lesson. And that's my goal when I'm taking on these accounts. I'm saying, how much can I learn whilst I'm taking this account? What can I learn from my risk analysis? What can I learn about my analysis? And often what happens is I go, the account's so small, I don't really care about it enough. Let me get my gambling hat on and let me make a silly play round about a news event or on the aftermath of a news event, and I shouldn't really be doing it. So often I pay about $40 to find out, not often, but in the past I've paid $40 to find out that I don't have a lot of discipline and I'm just willing to be a little bit more aggressive and excuse myself for bad behavior patterns on a lower account. I've got a funded account and I've seen that funded account grow and get payouts in the same time that I've lost a $5,000 account. How do you work that out? The only difference is mindset. Looking at something and saying, hey, this is my, this is my side project, but this is my main thing. And I'm going to treat that with respect. So first and foremost, coming into any funded account with the right kind of mindset of what does this account mean to me? And the first thing I'm willing to do is look at a funded account and say, I don't care about this because I don't want to put it on a pedestal and I don't want to look at that account and have that account try and drive me. I want to use that account as a vehicle, as an investment vehicle, and I want to be in control of how I drive that account forward. Last thing I need is a passenger grabbing hold of the wheel, pulling me into the ditch. And if I've got an account that's too big, I can tell you that's what's going to happen in a hurry. My psychology is going to fall apart. I'm going to start thinking about the money, and I'm going to be really, really quick to start acting outside of my trading plan. So first and foremost, I would align myself with an account that is the right size for me. And if I'm looking for a tiny bit of growth, I might go from a 5K to maybe a 10K, or I might go from a 10 to maybe a 20. But it wouldn't be about the money at this point, especially if I don't have the track record. So that would be the first approach. Murray, we just started talking about funding accounts and how to get funded, and we've only just touched on only approach a funding account that you can afford to lose, and it's not going to affect your confidence in your trading or your ability as a trader. So starting small, nice and small, don't rush it. Don't put the cart before the horse. What do we got? Sam saying, been a funded trader once and lost it due to time restrictions of not trading and now doing challenges to become a funded trader again. Okay. Okay. So trading Zillow, I agree with this current attempt. I chose to only go with a 5K evaluation because I know that $40 is not going to stress me out. Brilliant. That's a fantastic position to be. Now, if you are building a track record at trading and you can take that 5K account, what you can do is you can pass that through your phase one, you can pass it through the phase two. It's only cost you $40. If you made a 1, 2, 3% gain, was that 2% gain? You've made $100 on that account. You get your payout and you get your refund. You've got your $40 back, plus you've made $100 profit. Your investment was $40. You've made a 250% return on your investment. That means not only can you go and blow that account up, we're going to be careful with the words we choose to use, but not only can you hit the max loss on that account, you can now go and buy that account 2.5 more times. Now, if you're trading at 1% risk, you've now given yourself a window of 35 losses before you're back to break even financially. Put yourself in that position, and then you can use them payouts to go and buy yourself a 10,000 account. Put it on a trade copier. Use them payouts, buy a 20,000, 50,000, 100,000. This is how you, in business, how you would just take a small investment, you would grow it, prove your concept, and then reinvest into the business either from outside capital or your own capital. I took a little 5K account, made, I think, over 2,500% return on my investment. I got 6 payouts on that, and the account got scaled, I think, to 6,250. Company disappeared overnight, and I don't have it anymore. But what did it do? Well, it paid me hundreds and hundreds and hundreds of dollars return, and I only paid $30, $40 or something. I think it's $30 for the account. And I earned enough from that to go and buy a $100,000 account. And I did that from a $5,000 account. So I went to market with $30, $40. That's my total exposure. And I was patient, and I spent 4.5 or 5 months, and I earned enough from that to go and buy a 100K account. Now imagine I bought the 100K account and I did the same thing. We're now talking about thousands and thousands of dollars return, and I've done nothing but had $40 exposure. So that's all that I would say is just start small. And if you're nervous about trading, if you're stressed when you're in a trade, reduce your size. You've got so many opportunities in the funding world to not try and chase funding and be funded immediately. A lot of the, like 5%ers, fantastic company, they don't have time restrictions now. You can have an account for 6 months. Take your time on it. Learn as much as you can for $40. And if you're serious about your trading, being on demo is only going to give you a little bit of feedback. But when you're on a funded account, you're going to get loads and loads and loads of feedback about yourself. How do you feel about trades going into profit? We look at this trade down here. I'm $70 down. I'm like, okay, I'm chilling. If this was a 5K account, I wouldn't be chilling right now. I'd be down 1.5%. I'm chilling because I'm not even 0.1% down on the account. And we can see that we're up, I don't know, $5,000 on the account. So risk management, but not just on the account, risk management to yourself personally. Paul's saying blown 3 accounts in total. You've done well to only blow 3 accounts. I know many traders are well into the dozens, if not more, but that's a part of the learning process as long as you learn from your mistakes. Yes, blowing 12 accounts, in my mind, is did you take 12 independent good lessons from those accounts? If you blew 3 accounts for the same reason, you're wasting your money because you should have learnt that on the first account that you blew. And so I think it's so important to journal around your trades and hold yourself accountable. I'm going to invest in my trading with $40. I'm going to take on an account and I'm going to learn everything I can. And I want to learn for as long as I can. So if I risk 5% a trade, I only get 2 opportunities to learn if I'm wrong. If I risk 1% a trade, I get 10 opportunities to be wrong. If I risk 0.5% a trade, I get 20 opportunities. For the Instagram traders that want to be trading 1 to 100 risk to reward and think that's normal, you probably want to be trading something like 0.1% risk per trade because you will need the opportunity to be wrong multiple times. So give yourself breathing room. Like me, I have a win rate of around about 70. I don't know, 70, depends on what account I'm looking at, but it's a high win rate. So that means that I don't need to be trading with 0.5% risk. Why? Because statistically, I should never really take a drawdown bigger than 10 to 12 losing trades consecutively. So I can be a bit more aggressive. I could probably bring my risk up to maybe a 0.7. I could build my account. I could bring my risk up to 1%. It's within my statistical probability that I'm not going to lose an account because of my win rate. And my win rate is higher because of the negative risk to reward. So we're going to take a quick 30-second break. When we come back, we're going to really dive into some techniques that you can use to try and pass in a time that makes it all worthwhile. Stay tuned. We'll be back in a
Entrance
second.
music. He's got his
I just don't remember what I was talking. Now they're firing the one.
16th of a pip.
No.
So
Right. Also, fellas, milk some calories.
Hey,
All right.
we're gonna have some fun here on the stream for sure.
Right, welcome back. So we're talking about funding accounts, how to get a funded account, how to pass a funded account. There are so many examples I see where traders will think the way to get a funded account is by over risking. And when I say over risking, it's basically just picking up the account and sending it, trading it at 4% risk, 5% risk, dollar cost averaging, not having a stop loss, not calculating that risk from the outset. I'd like to say I've seen it all. I've definitely not seen it all, but I would say I've probably done the majority of what I have read online. I was watching something over the weekend, and I'm not going to go into specifically any names about this, but the trader's been banned across many, many accounts in the prop space, many accounts. And the trader was talking about it. And I was like, okay, I'll hear what the trader's sharing. And they shared some emails that were sent from prop firms to themselves about their trading activity and why they had been banned. And this trader was using 4.5% risk and holding a trade into a red news event. I think it was, I can't remember what the red news event was. Now, if your daily loss is 5% and your account max loss is 10%, when you're risking 4.5%, what you're really doing is saying, I'm risking 95% of what I can lose today. If you get slipped, you just lost your account. You're also saying I'm risking about 45% of my total account. And I like to think that when I'm trading with prop firms, I'm trying to build a long-term sustainable relationship. I'm trying to show them enough information that they can make an educated decision about me and say, hey, this guy manages his risk. He has drawdowns. He manages his risk. He climbs out of them, and he's a good trader. If I'm trading at 4% risk and I'm taking one trade and I'm just trying to gamble and get lucky, what am I showing that trader? And ask yourself, if you were a business, would you back that trader? Would you back a trader that was trading at 4% risk and just, I'm going to say, gambling into a news event? For myself, I wouldn't. Personally, I wouldn't, because it doesn't give me enough information about that trader. In fact, it shows me that that trader wants to try and get somewhere fast. And if you were in your car and you were trying to pull away fast, a lot of the time you get wheel spin. And trader was talking about how when he loses an account, you just go and purchase another one. It's part of the game. It's part of the business. And I disagree with that. I think you could never do that on a personal account. So why should you try and gamify and do that into this prop space? Now, sure, the prop world makes that kind of behavior available. And I think in many ways, we get the casinos with the flashing lights and it draws us in, right? But under all that sort of flashing lights is this brilliant business model for both the trader and the investor. And this is where you've got to say, am I in this for a cash grab? Am I in this just to try and make a bit of money really quick and not build sustainable relationships? Or am I actually trying to build a track record and a career in an industry that I want to be doing in 10 years from now and try and support myself and my family and all those around me that I love? And I think prop firm accounts are a fantastic tool to do that. But 4% risk, David, would you risk 4% if you could only lose 10?
Absolutely no. Max risk of 5%. Max risk of 5%. And you're talking about how right do you have to be? Number one, how right do you have to be on that one execution in order for your account No, if you're wrong twice in a row, you've pretty much lost the account, right? If you're talking about max 10% risk on it. One of the things that we talk about with I saw the question in the chat talking about win ratio. If your win ratio is, say, for example, 40%, let's talk about a 40% win ratio. That means you need to be a 2R trader to be profitable.
Yep.
As a 40%,
yep.
at a 40% win rate. So if your win rate is 40% and you're not a 2R trader, go back and look at your trades and see if you could have held them to 2R in order. And if you couldn't have held them to 2R and made profit on those trades, then you need to relook your edge. This is the kind of stuff that you have to go back and look at time and time again to make sure that you are honed in on what you need to do. As a one-to-one trader, you need a 50%. Yeah, you need like a 60% win rate really as a one-to-one trader. If you're taking less than one-to-one, then you need an even higher win rate. If you're a 3-to-1 trader, then you only have to have a 30% win rate, right? So you have to be comfortable with losing. is really what that is. If you just happen to be a 3R trader, a 3-to-1 trader, and you truly are, and you have a higher win rate, then yeah, you're really compounding your account, or you have the opportunity to compound your account. My experience has been that a lot of traders have a lower win rate and aren't holding trades long enough, and they're not honoring their stop, one or the other. But typically they won't hold their winners for long enough, and it doesn't necessarily make up for their losers. They add to their losers, and they continue to compound their losses, and they won't compound their winners, right? We've seen some successful traders out there that their strategy is to get something into the green and then look to add to the position and continue to compound their winners. We do the opposite. We're like, oh no, we need to add to this loser. I got to manage my way out of this trade instead of taking the loss on the trade. My perception or my strategy in terms of what I do is I want at least like 5 cracks at the market. That's what I want. So in a given day, I want 5 cracks in the market. So basically 0.2 percent risk on my account. If I don't win on the first 2 executions, I'm done for the day, even though I haven't risked a full 1%. So I have a very conservative way of doing it, because even though I want, so like if my first trade is a win, okay, great. I execute the second one, it's a loss. Then the fourth one's a win, that's great. And that's fine. But if I start off in the market, right, and I'm off sites the first 2 times, my numbers tell me I'm going to be off sites the rest of the day. My worst trading days have been where I've started off after the first 2 trades, and then I continue to basically be upset at a stock. I get emotional about it. I get, all these things, all the bad habits tend to come back, and I'll sit there and get crushed on something, and it's usually over trading a specific equity. That's what happens to me if I'm having a bad day. So my goal is to shut down my terminal if my first 2 executions are negative, and then I'm done for the day, and then I'll come back the next day. Now, does that mean I gain 1% on the account on a daily basis? No, but I know that my max is going to be 1% loss. If I hit 1% growth on the account, I'm done for the day. If it's more, it's more. But like as I manage my way out of a trade, if I get to that 1%, then I'm good. So really 0.4 percentage is like, I don't want to lose more than 0.5%. And if I can gain 1%, then that's kind of like that 2-to-1 kind of gain. It always kind of works out to where I'm like 1.5R, give or take, wins on a winning day versus a losing, so using those parameters kind of works for me. I typically have somewhere between a 50 and 60% win rate. Leaning here lately, it's been closer to that 60%, that 61%. But typically, I like to be, and that's kind of right in the sweet spot. I'm not a full-on 2-to-1 trader. I don't like being a 1-to-1 trader. I kind of like being in between. So as long as I'm greater than 50%, then that's in that profitability range. But sometimes what I get blinded by is that other 50% still doesn't feel good. I still don't like losing trades.
Yeah.
I don't, and even if I take a losing trade, I'm like, yeah, I was losing trade. I still don't like it. I don't, so that's something to work on though. Like you have to continue to work on it and make sure that you're focused on being able to shake those things off because,
Mhm.
that is part of what happens. Nobody's a 100% trader. Like they
No,
don't exist. They just don't
no.
exist.
And if you have a higher win rate, 85, 90, 95% win rate, they exist, sure. But it means the times you lose, oh boy, you're going to lose. You're going to lose and you're going to lose big, like typically relative to your wins. You're going to end up losing big. I mean, this trade here, we can see that I've gone in on EU as well. Just a small order with stops on this high, risking around about $70 on this. Chances are I'm only going to look to make 30, 40 bucks on this. GU's gone a little bit deeper. I wanted to see some volume coming in around this level. Hasn't done it. Now, I know if the market starts breaking this high, I know I'm offside on my trade. I'm going to be looking to manage or fix that loss, not typically come away with a win. Now, if this drives and becomes a full loss, probably going to take a $500 or $600 loss. Now, if I was looking to make 50, 60, $70, feels great to keep making 50 bucks a day. But when that loss comes, it's going to take 10 profitable trades away. And this is what David was saying, like traders typically don't honor their stops or they need to be a bigger risk to reward trader and they're cutting their winners short. David is very aware of the things that he needs to do, hence closing his terminal if he's hit a certain amount gain or certain amount loss. If you're going into the trading space and you're not aware of why you're losing accounts. That we talk about you can't out train a bad diet in the gym. So it's not about saying, oh, I just need to trade better. It's about saying you need to stop the things that are pulling you down so heavy. It might be that you're a good swimmer, but you've got these 20-kilo weights chained to your feet. And it's about actually getting those weights off your feet. It could be life balance. It could be, I need the money from trading and I need it now. That is not going to help anyone
I was going to
survive
say
any.
that's a recipe for disaster, and I hate to say it. I really do. I really hate to say it. I think there needs to be a balance to it, right? As a beginning trader, like you should have other sources of income and be able to like if you want to design your life right and say I want to trade for a living and I want to do this in this way, then you need to procure employment that allows you to do so in the times that you want to do it, but you can't necessarily rely on trading income to be your sole source of income and then put all that pressure on yourself and put yourself at risk, that much risk emotionally in terms of being able to withstand the emotional pressure of just like I have to be right on this or otherwise I'm not paying my electric bill or I'm not paying my like that is not the place you want to be in. Again, I talk about risking less than 1% of my net worth on a daily basis, overall. If I feel like, and that's because on the money that I'm trying to grow, that's what I'm trying to do. That's not 1% of my income, my expenditures and all that stuff. Like all of the rest of my life is budgeted out so that I can, if I woke up and did nothing today, my bills are paid. It's just the way that is. But that took effort to do and build something like that. That's not something anybody that's ever done anything kind of crazy in their lives. It's not because they didn't work hard and they lucked into this and they just like how many lottery winners do we hear about? They win the lottery, they spend all of it, they're in the poorhouse. They win
Mhm.
$10 million in the lottery, they buy a $7 million house, and then they have a few months of fun, and then all of a sudden they're done. Like, and it's because they didn't manage it properly because they didn't know how. And so you can't expect to go into this and say, I'm going to do this, I'm going to do this to perfection, and then everything else is going to be great. Like, number one, this has to be something that you kind of enjoy in the first place. Like seriously, this has to be something, and it can't be like the gambling aspect. Like, I like puzzles and I like numbers. Like, so the market is kind of more of a puzzle. Like, if you demystify it a little bit or put less of an edge on it to make sure that, like, that's why we're talking in percentages, right? you know
Mhm.
and it just in terms of the percentage, that's the growth or the contraction of the account. Uh it's not necessarily about, if I look at $70 is still pretty good money to me, right? if I look at it and say $70, oh man, what could I do with $70? Well, I can go out for a nice dinner, or I could do this with that, or I could that. Like all of a sudden, I find myself wanting to take that profit because $70 means something. But if it's like 0.02%, and I'm looking for like 10 times more than that, right? And I'm looking for a tenth of percent growth on that trade, it's going to basically demystify it to where I can let's let the trade play out to its fruition. If we're looking at a profit target, you're taking that full position into that profit target because it's based off of whatever risk parameters you have on your account, and you're seeing your trades based off your profit targets and your stop losses, and making sure that you're executing the trade fully. It's a very hard process to actually follow through on that. But that's kind of when you go back to your trade reviews. Did this go here? Did I follow my process? Did I not follow? What caused me to not follow my process? Why did I turn around and not take a trade here? What's happening, with my emotions that are telling me, hey, I just need to cut this trade because I'm not good enough to be a 2-hour trader. So I'm going to take this at 1.5 and I'm just going to do this, and I'm just going to secure the money and I'm going to walk away. So if you're saying that you want to be a 2-hour trader and that's what you want to be, then why is that? And maybe being a 2-hour trader isn't necessarily right for you, but is your win rate high enough to be less than a 2-hour trader? So it all goes back to making sure that we can actually execute the strategy we say we're going to execute and follow it through to its fruition, because this is a business. That's what it is. This is a business. And when you're growing a business, just like if you were to open a restaurant, you couldn't rely on that restaurant for an income for 3 to 5 years. That's just facts. And the same thing with trading. If you open up a trading account and you say, okay, I'm going to live off this, you're probably not. You're just not. So be honest with yourself and layer yourself with opportunities to be successful in the business, to make sure that you're telling yourself the truth on a consistent basis. And eventually, yes, trading can become your income. Trading can become what you do for a living, and it's the only thing that you do. But you have to work yourself there. You're not going to wake up.
But hang on. So a misunderstanding I had. Let me just hop in quickly. A misunderstanding I had is how cheap I could get into trading, and how cheap I'll be able to make an income from. I thought, well, I can get into trading as cheap as a challenge account, or $40, and I'll be able to be a full-time trader. I'm going to be able to support myself. For myself now, and this is just my opinion, it's taken 6 years of full-time trading to come to this opinion. So what you do with this opinion is totally up to you, but this is just my opinion. If I was looking to be a full-time trader and support myself solely from trading, I wouldn't even attempt to do that if I had less than £20,000 in my personal trading account. Okay? I wouldn't even attempt to do that if I hadn't supplemented my income in a way that I didn't need to make money from trading at all. I wouldn't attempt to do it. If I couldn't do that, I wouldn't even attempt to do it unless I had at least 6 to 12 months of income saved up in the bank that could support me outside of not earning anything for 6 to 12 months. So first and foremost, I'd say I would want to make an income outside of trading, and then trading the pressures away from it immediately. If I didn't decide to make an income out of trading and I was coming away from full-time trading, I would then be looking to say, okay, I need 6 or 12 months worth of money to support myself. But watching that drop each month is going to add pressure. And then the last thing I'd say, I need at least £20,000 in a personal account if that's my chosen route to support myself from trading. Now, most people, they're not going to fall into that camp. They're not going to be working a job and saying, hey, I've got a spare, 10,000 that I can just park in my bank just to support myself. Most people aren't going to say, I've got 20,000, I'll chuck in my trading account and just learn to trade on. Most people won't have £30,000. And so most people do have the opportunity to work and have an income outside of trading. And for me, that would have been the smartest approach. It wasn't the approach I took because I had enough to have a go at making this my full-time attention. And I said, that's the trade-off. I don't want to work a part-time job for, say, 20, 30 hours a week to support my bills and then work evenings and weekends learning how to trade. I want to go into trading full-time and learning full-time. And I understand that this is going to cost me money to learn. but I'm going to put that money aside to support myself. And I did that for the first 2 years. And it cost me £25,000 to support myself to learn how to trade. That was my tuition to the market. And that's not including the losses I made during trading itself. And oh boy, did I lose some money during that time as well. So we had the 25 to support, plus my losses as well, plus the subscriptions. Could be a TradingView subscription, could be a Signal course that I may or may not have bought, could be in a couple of trading courses that I bought as well. So we're talking tens of thousands. Now, to me personally, it's not the smart way. The smart way would have been say, you know what? I'm going to stay in some kind of employment. It could be part-time, could be full-time, and I'm going to learn to trade around that. I'm going to start on the higher time frames, where I only need to check the chart once or twice or 3 times a day, because there is an edge in that stuff, and there's an easier edge than the lower time frames. I'm going to get my risk management down, and I'm going to only take a $40 account. And my job is to make sure that account does not blow up within a month. And if it does, then it cost me $40 in that month. And if I did that every single month for a year, it only cost me $500 to learn how to trade. You would significantly be in a better position than I chose to put myself in, but didn't realize because I was chasing the dream of trading. Had I have done that in the first year alone, I probably would have been £15,000 better off. And I still would have been just as good of a trader a year later. Yeah, £15,000. So when we talk about tuition to the market, I can see there's a comment here from Nadine Trade saying I lost 2023 and running 2450 plus accounts. 2450 plus account. Now, if we've lost multiple accounts, let's say we lost 20 accounts and they were $5,000 accounts. We've lost $800. Now, following that model I was talking about earlier of getting funded on a small account and just sticking to your edge because you built those skills, you can make back $500 or $600. Buy $100,000 account, build that account to live. You can make 1% on that live account, just 1%. You made $1,000. Your payout's probably $800, and you have covered your entire tuition to the market. So, traders that want to go down the prop firm route, stop gambling with your risk management. Stop trying to get there fast. Use a level of risk management that applies to your personal circumstances where you're not going to be tilted if you fail an account. If you're on a 100K account right now and you're in drawdown and you're stressing because you're losing that money, it's probably because it's too much for you to lose. Practice your craft in demo. Practice your craft on a small account where you have a tiny bit of skin in the game. Learn personal life risk management. Practice consistency. Every single day, wake up, same routine. Aim to be a little bit better. If you don't do your weekly reviews, as David said, you're blindsiding yourself and stopping yourself having the opportunity to see where you can grow. And it's these 20-kilo weights on our feet that are dragging us underwater as we're trying to swim. Get rid of those first. It might be all that baggage in your life in general. Get rid of that. Get rid of bad debt. Get rid of all that stuff. And you might find that actually you can tread water with the skill set you have right now. You might be a break-even trader, but you don't know it because this life admin, this life baggage, these poor decision makings, this stress we put on our shoulders from having too many accounts, maybe it's dragging us down. So the easiest way is I get a $5,000 account, I get it funded, I put it on a trade copier. That's my master account, and everything else copies that account. I could have hundreds of thousands or millions of dollars of funding accounts in capital, and I don't see them because they're connected to the 5K account, and all I see is $10 win, $10 loss. I'm not looking at the back end worrying about how many hundreds or thousands of dollars that is. Because if I do, I'm going to break my trading processes. So I've learned how to put myself in the best position where I can trade at my peak performance. And that's the area that not many people are talking about when it comes to passing fund accounts. Passing them, they're just risk 3% a trade. Keep flipping the coin, you'll get lucky, you'll pass. But will you keep the account in that manner? No. So what we're doing is we're talking about an approach of one, how to pass it sustainably, but with that same approach, you would have learned all the skills on how to keep that account as well. And that's far more important than just keep flipping coins and YOLOing accounts and just trying to pass again and again and again. We don't just want to eat a massive fish and be full for a day. We want to learn how to fish and keep bringing in small fish throughout a weekly period, a monthly period, and a quarterly period. And that's a huge part of our mission at TradeDelicious, is to elevate the retail trading space. But so much of the retail trading space, including myself earlier on, and less so now, continuously cycle through this boom and bust of trading and blowing accounts and saying trading is a scam. You scammed yourself because you got
I was
caught
gonna say
up in
you're the
marketing.
one that hit buy or sell, right? You're
That's
the one that
it.
hits buy or sell. Nobody snuck into your house, grabbed your hand, navigated you to the website, click buy account, buy evaluation, open the trade terminal, download it, do this, do that, and then click buy or sell. Like you drove yourself to all those decisions. It's a lot of power, but it's a lot of responsibility, right? Like this is the best thing about this, right? As we, as it seems like, we're telling people not to trade. Just don't trade for the wrong reasons. And if you do decide to trade, make sure that you're doing so from a place of true understanding of what it actually takes, right? And what it
Mhm.
actually takes is a trading plan, not only in terms of strategy, but in terms of account management, how to build that account. What how does the math work out based off of the strategies that suits you individually best, right? I mean, there's people, you talk about the 11-hour time frame and the 11-minute time frame, and there's other people that trade a thousand period moving average on a 2 tick freaking chart. Whatever it is, I don't care what your strategy is. I'm not here to tell you that your strategy is the best strategy in the world or the worst strategy in the world. What I am here to tell you is that whatever strategy you think you have an edge in, make sure, number one, that you actually have an edge in it. And number two,
Mhm.
make sure that you not only back test, but forward test, and make sure that you're doing the reviews on what that strategy is actually doing, and then how many are in terms of profit you're actually executing off of that, to make sure that your strategy is profitable and that you do have an edge in the current market condition. Like that's what I'm here to tell you. Like I'm not here to tell you how to trade your account. I'm just I because I'm not you. I don't know how you feel emotionally about holding trades for longer, or trading with larger size, trading with smaller size. How, like, yourself most from an emotional standpoint. Yourself most from a trading experience standpoint. Most a lot of people on the channel are probably towards the beginning of their trading period. The journey doesn't necessarily end. It sounds cheesy, but it never ends, because the market is always changing. You hear us
Mhm.
complaining all the time. I don't understand why this market doesn't make sense. Well, the market doesn't care that you think it makes sense or doesn't make sense. The market in 2024 is doing what the market in 2024 is doing. You have to
Yeah.
be able to adapt to what it's doing at that time, and then be able to recall the information. Some of the best traders in history, they could sit there and say, well, back in 1997, March 25th, we really saw a lot of volume in this equity. And they're recounting their experience in the market. And they remember a time. And so they've cataloged all these experiences and all these trading sessions in the market that allow them to make informed decisions with an edge as it pertains to the market that day.
Yeah.
So it's a
Yeah.
bit so it's a bit different. So like that's what we have to do as traders, is continually educate ourselves. And a great trader, even when they've been in the game 35, 40 years, they continue to grow as traders. They don't sit there and say, I know the markets and I'm only going to trade in the way that I know. They're always
Yeah.
consistently evolving. So we can't expect to sit there and say that the market's going to bend to necessarily our will. It's, you have to come back and study that and make sure that you're doing right by yourself and giving
But that
yourself
does
the
get
opportunity
easier.
to succeed.
It does, although the markets are changing, it does get easier. You develop a skill
Yeah.
set where you go, okay, I
Yep.
know how to roll with these punches quicker.
Yep.
If you said to Rich, the market's changed tomorrow, cool. Did the entire prop firm space change? No. Did my understanding of
No.
risk management change? No. Did my
No.
understanding of liquidity change? No. We can
No.
use all these skills and we can lean into them.
Yep.
I love what Graham said in chat. I don't think it's so much about how much you risk per trade, but more to do with if you can afford to lose it. And also if the prop firm will allow you to do it. That trader I referenced earlier, a lot of prop firms simply, yeah, sure, you can risk 5% max a day, but they don't really want you to be risking that amount a day. Alex from the 5% has joined us. She said sometimes we can see that traders are, all in mindsets and they're just trying to push accounts to the finish line too quick. He said, and sometimes our risk team has to have a word with these traders and just say, look, we want to see you do well. But we know with this level of risk and the consistency or the lack of, it's actually going to cause an issue long term. So let's put a risk improvement plan in place for a little while and follow this. Now, you don't need someone to put that in place for you. You can do it yourself. So if you're still going through this boom and bust cycle of cycling through accounts, just figure out what you're doing. Figure out, why am I burning through this account? Why am I blowing through this account? It's something that you don't need to necessarily be in a position of losing 3 accounts in a week to learn a lesson about yourself. So for me, I would say I want to take that account and learn as much as I can. My bootcamp account, phase 1, took me 6 months. It took me 1,100 trades to pass that account. Can you imagine what I learned during those 1,100 trades? I learned so much that my phase 2, which is an identical model to phase 1, only took me 400 trades, and it only took me 4 months. And now I'm in my phase 3, and it's using these lessons and compounding these lessons. But you're not going to get those insights if you do not do the work and you do not put in the time. And your weekly reviews are a fantastic opportunity to do that. So if you haven't done so, hit the thumbs up button. Futures Focus is coming your way. We're going to play this. This is going to be with Jordan. So stay tuned, and we're going to continue to elevate your mindset around this whole trading space.
Good morning. What a great way to start. Great, guys. All right. And we got some cool 10-pip rich and Euro days. I like the Euro days.
Up there, keep
Well played, Patrick. Well played.
Now, the solution to analysis paralysis may sound a little odd, but stay with me here. But when there's a time to execute, there's a time to execute. You need to ask yourself these 3 questions to get the ball rolling. First and foremost, you ever get to the fridge and figure out you have no idea what you want? You open everything up, you start to investigate, and you start thinking, okay, I could get the leftovers from yesterday, but wait, the wife wants those. I could go ahead and I could just make some chicken, but who wants to cook? There was that broccoli thing that I wanted to do the other day. I don't have time for that. Maybe we could do some kind of microwave thing. You know what? You end up closing the refrigerator door, backing up and realizing that you walked over to the refrigerator for no reason because you're too indecisive to make a decision. You, my friend, are suffering from analysis paralysis. It's something that traders day in and day out suffer from. The idea that the more we analyze, the better we'll be able to make our trades. The better we'll be able to make our trades, the more money we'll make, right? Wrong. Just because we put ourselves in a position to analyze things well and understand the markets well doesn't mean anything unless we execute. So this video will be going over how to stop analysis paralysis and how to build a better system, a better mental model to make sure that you are able to come to the charts and not just watch the action, but take part in it. Now, the solution to analysis paralysis may sound a little odd, but stay with me here. The system is really simple. It's called Ready, Fire, Aim. The name comes from a book by a gentleman by the name of Michael Masterson. And is it for traders? Absolutely not. It's a book that's really built for entrepreneurs. It's not really developed in order to present to traders, but it has principles that can be used in trading day in and day out. Oftentimes as traders, we don't necessarily see ourselves as businessmen and women, but that's what we are. When we come into the markets, we're looking to turn a profit. We're looking to turn over revenue. In order to do these kinds of things, we have to make sure that we are treating ourselves as a business. Over the past few months, I've been trying to think about my trading more like this, in this business mind frame. So I picked up this book, Ready, Fire, Aim. In the book, Michael Masterson goes through a few different stages of everyone's business life. The exact stages, the exact details aren't important, but the principles certainly are. The first principle of which is something that we have to make sure we knock out of the park immediately to overcome analysis paralysis. It is making sure we are ready to enter into the markets. The entire book, Ready, Fire, Aim, was written in order to really start inertia, right? The idea that If we can get the ball rolling, it is easier to continue that ball rolling as we move forward. Analysis paralysis is an issue where we don't have any kind of motion. So we have to get that ball rolling. We have to get that engine started in order to start finding some trading success. Sometimes in order to accomplish this, traders need a new perspective. That perspective really starts on how we think of risk. Oftentimes as traders, we enter into the markets because we're interested in making tons of money, and a lot of traders struggle with risk up front. We hear these horror stories of people losing their mortgages, losing thousands of dollars, their savings, their retirements, their parents' savings, their parents' retirements. These are horrible things that happen, and sometimes for those of us that suffer from something like analysis paralysis, these stories are playing in the back of our minds as we begin to trade. We're afraid of risking money because we don't want to be that next horror story. We don't want to be that next Reddit story of a trader that entered into GME thinking we were going to be the next Reddit millionaire and end up being the next close to thousandaire very quickly. Now it's true. Good traders often do focus first and foremost on risk management. Good risk managers are traders that will not only be here today, but will be here to trade again tomorrow. In many ways, trading is a long game. But for traders that struggle to actually pull the trigger when the time comes, when that setup presents itself, it's important to understand that there has to be something of substance that is at risk in order for you to trade. Even if it's just a $50 prop account, at least you have something on the table. At least you have some pride that is at risk of being lost if your strategy doesn't perform well. In order to know whether or not you're ready to enter into the markets, you need to ask yourself these 3 questions to get the ball rolling. First and foremost, does this strategy look good in backtesting? Have you been able to backtest the strategy and ensure yourself that for a reasonable period of time, looking at not just 1 or 2 sessions of the market, this strategy has executed and executed well and is executed profitably? Underline big red letters, profitably. This is the key to success in trading. The second component is really just about your gut. Do you feel like you can actually trade this strategy? What do I mean by that? Well, are you an impatient person looking to swing trade? Maybe that's not for you. Are you a very patient person who struggles to think on their feet? Well, maybe you shouldn't have a scalping strategy. You need to make sure that whatever strategy you're applying fits your personality to a certain extent. The third component is really simple. It's really just about forward testing. Forward testing is all about trying your strategy in real life. Are you able to put the strategy in a very small trading account where you're just trading with micro contracts, micro lots, singular shares? Are you able to trade this strategy on that micro level at a 10th or a 100th the size that you plan on trading it with once you go truly live on full size? If you're able to do that with some real risk in the market, it doesn't have to be big. You could be risking $5 a trade. If you're looking to trade with $5,000, you could be trading with $50 a trade if you're looking to trade $50,000. The key here is you're able to put on some kind of risk and accept that risk as you're trading. Once you've gotten these 3 components down, now you can truly say you are ready to enter into the markets. Now it's time to execute. It's time to fire. Matterson believed that there are dozens, thousands, maybe millions of great ideas that never make it to the open market because of 2 primary items. The first of which is a simple case of perfectionism. The second is procrastination. Traders, investors, people really, we often get very obsessed with this idea of finding perfect opportunities, perfect trades, perfect risk to reward. It's a beautiful idea, and in theory, every trader should be looking for nothing but the most perfect trades that fit their strategy every time they trade. But in real life, you're very rarely going to get A+ setups. That's just the honest to God truth. As traders, we need to understand that 90% of our trades probably are going to be imperfect, and that's okay. If you have a checklist of, say, 5 items, for example, and you're looking to hit every checkbox on that list. You might trade once, twice that day. If that's your system, great. But if you're looking to get 3 or 4 trades, or 5 or 6, or 7 or 8, markets themselves are imperfect. So how can we wait for perfect opportunities? It's never going to play out exactly as it did in backtesting. That's just the nature of the beast. I know for myself, the best trades that I take on an annual basis, the best setups, I might see maybe a dozen times a year. Most of my trades, 90% of my trades, are B minus, B plus if I had to rank them on a traditional scale. I'm okay with that. Now, if you want to be the guy that takes 2 to 3 trades a year, only the most perfect trades in the world, then more power to you. Most of us aren't that guy. Most of us don't have that kind of capital to just afford to trade 2 to 3 times a year and be able to produce the kinds of returns that we're looking to produce. And so we have to understand that imperfect trades are really the only trades that we're going to have available to us. It's just our responsibility to understand that we're looking for high probability, not certainty. Never certainty. Once we accept that the markets are never certain and that we're only looking for probability, then it's just that much easier for you to pull the trigger and go ahead and place the trades that you know you should be making. The next piece of the puzzle, the next obstacle to actually firing away and executing, oftentimes deals with procrastination. I'm sure you've done this before, where you found yourself looking for things to do to take you away from the main thing that you have to do, right? All of us did it as kids. If you have to do your homework, now's the time to do the dishes. All of a sudden, the dog hasn't been out in a couple of hours. He needs a walk. You know what? I've really been thinking about cleaning out the dishwasher. Now's a great time to try that. All of these things are great things to do, but when there's a time to execute, there's a time to execute. And look, guys, I get it. Sometimes I get very valid excuses from traders. Things like,
hey Aaron, I really want to be in the live markets today, but I don't think it's the right time for me. I just realized I didn't explain my strategy to my dog yet, and I think his input would really help me to be a profitable trader.
I hear what you're saying. But just give me a little bit of rope here. It's been 6 months. Don't you think that you should just be in the live markets trying your strategy? Do you think that if you talk to your dog, do you really think he'll be able to help you make money? Look, maybe every excuse isn't that dramatic, but sometimes we put these obstacles in our minds to stop us from doing things that scare us. And this fear is unfounded. As traders, we have to be excited to put risk on the table and give ourselves opportunities to produce returns. We're risk managers. Without putting risk on the table, what are we managing? If you've gone through all the work of producing a strategy that's ready for the open market, that's ready to be involved in the live markets, then you owe it to yourself to put risk on the table and find out whether you're wrong or profitable. As a bonus piece of advice for you, if you are finding it hard to place on risk, I suggest that you lower that risk size in order to make sure you're appropriately managing yourself to the best of your ability. No one requires you to enter into the market with 1 full lot or 1 full contract or 100 shares. You can trade at a smaller size. The retail market is now flushed with a variety of different options that give you opportunities to trade with just a couple dollars of risk. But at least this way you can participate in the markets and start to build confidence. The whole purpose of this process, ready, fire, aim, is to produce confidence in your trading so that you're willing to put on risk and responsibly manage that risk as you're firing away and executing. After you've fired away, you've executed, and you've gotten a good sample size of trades, now is the opportunity to aim. Aiming is all about fine-tuning. You start off by fine-tuning by asking yourself a bunch of if-then statements. If your strategy wasn't profitable after going through ready, fire, and we're at aim, garbage. If your strategy worked well, but you lost hair over it and now the beard's getting a little grayer, garbage. The main idea here, the main core here, is to really fine-tune things, find problems, and find solutions to these problems. Sometimes these problems are the strategy sucks, so you have to throw it out and start with a new one. Sometimes the problem simply is it's quite stressful for you to trade the system, So maybe you have to lower your risk. The main core ideas around aiming are all about readjusting yourself to make sure you're hitting your targets. To make sure you're ready to begin really aiming the strategy, you have to make sure that you have a good sample size to talk about. Sample sizes vary from trader to trader. Swing traders are going to have a much smaller sample size than scalpers. Day traders will have something in between the two. But the core of it is you need to have a good amount of trades and time. For me personally, as a scalper, I like to see a couple months of trading activity before I can really judge a strategy. For me, that might be 150, maybe 200 trades over a couple of months. If I average something like 25 trades in a week, 25 by 4, or 4 by 2, you get the math. You need to find something in the sweet spot that works well for you. Most of our traders that come to TradeDelicious though are scalpers or day traders. So I suggest that you start by looking at 100 trades as a sample size to begin judging it. Look at some of your statistics. The stats that really matter, that really are going to make a difference. Start off with profitability and positive expectancy. How long were you able to hold your winners? How quickly were you able to cut your losers? Did your strategy perform well only when the market was down? Did it perform well only when the market was up? Was it more successful during times of volatility? Or did you require ranges in order to find yourself producing profit? All of these are very important questions that should flow through your head as you begin to aim your strategy and land right on target. After doing all of this work, after compiling all of this data, you should feel confident about your ability to enter into the markets. It should be easier for you to overcome this issue of analysis paralysis. Confidence in trading is all about experience and seeing yourself time and time again producing positive results even after seeing multiple different kinds of markets come and go. That's all I got for you. I hope you enjoyed this episode of Futures Focus, where we focus on trading for the future, not trading for today, but trading for tomorrow. As always, like and subscribe if you want to see more of this kind of content. Join the Discord if you want to be a further part of the conversation. We look forward to having you. Most importantly, as always, please trade well and trade delicious. I'll see you.
Back to the man himself, Aaron Collier. Thank you for that fantastic little clip. How's it feel? How's it feel now it's aired out to the world?
It feels good. It feels good, my friend. I think I'm always excited about sharing my general journey with people and different tips and tricks that have helped me to develop a little bit easier as a trader, right? I think a lot of us suffer from a variety of different issues in different stages of our trading. And I hate this idea that, once we have a problem in trading and we overcome it, we'll never have it again. Sometimes I feel like that's the feeling that we get, where if I just solve this problem right now, I'll never have to see it again. I can just get over it today and then move forward tomorrow. That's never really how it works. Sometimes you have an issue like analysis paralysis early on in your trading career, and then it rears its ugly head a few years later after something happens. I know for me in these markets, especially trading the NASDAQ, going into summer, there's a little bit less volume in futures. There's been some weeks here that haven't had as much in the way of volatility. So sometimes I'll sit on my hands for far too long, watching setups just pass me by and losing out on opportunities where I know I could be making money. Is that something that ever sticks with you, Jordan? Do you ever have a problem pulling the trigger?
Oh, absolutely. Absolutely. We've actually done a little chat about this with Louise, our psychology expert here at TradeDelicious, if some of you guys are new. And we dove into exactly analysis paralysis and kind of the process of overthinking, right? And it is very much that. It's that thought of overthinking your process to the point where there's a million elements you haven't thought of. So you try to add those because you think it's going to benefit you, but it doesn't. It doesn't. It actually hinders you. And there's a lot of different ways you can look into analysis paralysis and how it can affect a trader as well. Another one on top of that is in sharing your process. As traders, whether you know it or not, we do a lot based on gut feel. We do a lot based on instinct, and we do a lot based on our experience, right? So we make some decisions that are based on our experience. Sometimes people go through analysis paralysis when trying to teach people that instinct, when trying to teach people why they've made certain decisions, which was just a natural gut decision, which is part of their edge. They'll go through and try to explain why they've made that decision. They will never be able to make that decision the same again, because they've started analyzing parts of their natural capabilities in which they haven't realized, or it's a habit they've grown over the years, and they haven't realized how important and how crucial that is to their whole trading plan. And when they start going through to analyzing, but I think it doesn't just stick in trading. I think it goes in life. You know, how many times in life, Aaron, have you heard, if I can just get that promotion, I'd be so much happier. Oh, if I just bought that house, my life would be perfect. You know, if I could just get that better job, if I could just get that new car, if I could just marry that woman, if I could just have another child, whatever it might be, there's always something someone's trying to get to be happy. Right, there's always something, and I'm almost willing to guarantee. And some of you share it. Right? There's a few of you in chat. Share it. Is there something that you're thinking about? Maybe it's trading related, maybe it's not, that you think is going to make you happy if you get, and you're running to grab it, right? And then you have a look at that, and when you reach there, there's always another challenge. Always another challenge.
Always.
So I think it's an interesting topic to run through. I think it's interesting how our human minds function in that way, and how so many people can be so motivated to achieve something, but for almost the wrong reasons. You know, you can be so motivated and have so much belief in order to achieve something that you think is going to improve your life or make you happy or bring you to that next level, and it doesn't always do it.
It doesn't. It doesn't. And I'm so glad that you brought up Louise. Louise was a really big inspiration for this video. I watched her interview with her on this and a couple other things when I was looking into analysis paralysis. It's always so great to hear from someone who's a trained psychologist on some of this stuff. You know, I think one thing that really helped me as well is not just your talk on analysis paralysis, but ironically, something that's only kind of connected, this idea of goals, really setting different kinds of goals and really talking about this idea of mastery goals. I think one thing that we do that causes, or that can sometimes make us sidestep execution and causes some analysis paralysis, is the fact that we have these goals, these ideas that, exactly as you say, we feel are the end all be all. When I get X amount in funded accounts, I'll be able to make more in a month than I've made in a year, and it's just going to be the normal thing. Once those accounts come in, I'm just going to have this money consistently. Every month is going to be the same number. $120,000 a year is just $10,000 a month. I'm going to produce that every month. I'm going to withdraw 5,000. Everything is very, very precise when we think about the numbers, right? It's never like that. It's never like that in real life. So when you're setting your goals, something that helped me considerably with this idea of analysis paralysis is I actually don't have any earnings goals. This is a little controversial because I do feel like there is value in writing down numbers that you want to hit, saying that you want to make $100,000 in a year off of trading. I think that there's real value in that. But over the past 2 years, I haven't had any goals concerning my income. My fear was always that I would cap myself by saying I want a certain number. Then when I achieve that certain number, I wouldn't have any direction. So all of my goals are really connected in some way, shape, or form to a degree of mastery. If you haven't seen that video that I'm talking about, this idea of mastery goals is a really amazing concept where you look for some kind of intrinsic value in your goals. You're not looking for something external. As Louise says, an external goal is something where you perform very well, you get medals around your neck. An internal goal is you perform very well and you get an internal warm and fuzzy feeling. So my goal is to do things like I want to make sure I journal every day. My journal isn't always
process goals.
process related. My my trading, my journaling isn't always very normal. I do a lot of recording myself trade. I record my process. I video, I screen share, I video record. All of these videos, they go into this little corner on my computer. I want to make sure I'm doing that every single day. That's a really big goal of mine. When I see on a calendar I've hit that day after day after day over the course of a month, that's where I get a lot of my satisfaction from. That's where I get the value of my goal setting. So it's easier for me to place a trade, put on the risk, put on the execution, because I'm not always thinking so much about the money. You can't avoid thinking about the money. Of course, I want to make more money, especially as I've performed really well this year. I've raised my size a couple of times this year so far. All of these things are a very, very important pieces of the puzzle. But if you start with something intrinsic as opposed to extrinsic, I feel like you progress much faster and you're a lot happier. I don't know.
Absolutely. So what talk to me about your goals a little bit there then. Obviously they're not directly money correlated, but especially in trading, we don't trade because we enjoy it. We do enjoy it, right? But the main reason we're here is because we make money, right? And we want to make money.
Dollars and cents.
How do you align your kind of process goals, right? Those milestone ones, like you traded the way you were supposed to for a month, or you journaled it for a month. How do you align that to that resulting in making you more money?
So the things that I align with are all based in and around stats, statistics. It's all based not really around dollars and cents in the same way. It's definitely a very odd answer, but what I want to do is, if I ever have an extrinsic goal, it's almost always something about statistics. Right now I'm averaging for example, I know one of my statistics on hold times. I know that I hold my winners right now approximately 3 to 4 times longer than my losers. So I'm trying to shorten up the time that I am in my losers, and I'm trying to elongate the time that I'm in my winners. So doing little things like that, trying to figure out a way to say, okay, I'm in this trade, I'm up 2R, I'm up 3R. How can I extend this to 4R or 5R? That's been the real methodology where I've found a lot more in the way of success. I've been taking a lot of the same trades. The strategy hasn't really changed too much in the past 12 months. But what has changed is my ability to be able to hold and cut a little bit quicker. So that's really based around my risk management. That's where I'm starting to find, and I have found, much more success and much more money being made in my account, not because I'm looking at the actual dollars and cents that come out of each trade, but I'm looking at things that indirectly produce more dollars and cents. If I'm cutting trades faster, then I have less at risk. If I'm in winning trades longer, then I have more to make as I'm in long-term trends, which is the core of how I trade. I'm a pullback trader, always have been, always will be.
Well answered. Well answered. I've got no rebuttal. It's the answer I wanted. It's the answer. The moment you said it's based on statistics, we had a little discussion in the chat earlier today. I think it was with Sam. Sam, if you're still here, let me know. Asking about his win rate. Right, we were talking about what you need to risk in order to pass different firm accounts and things like that. And he asked, what should I be risking? I have a 40% win rate. And I was like, that's one piece of the puzzle. I can't tell you anything based on your win rate. I need to know what your risk to reward ratio was, right? And we went back down this age-old argument of, well, my risk to reward ratio is somewhere between 2 and 3. And I said, no, I don't need a rough idea of where it is. I need the exact digit on what your risk to reward ratio is. And now what most people's response to that is, I don't know. And that's really alarming, right? And that's what I like about especially what you're sharing in the Discord, showing all your statistics there, is people saying that like risk to reward ratio is something you do before you get into trade. Like, I'm aiming for 3R, and it's like, no. Risk to reward ratio is how you figure out your profit factor. Risk to reward ratio is something you combine with your win rate post trade to know whether or not you're performing, right? Then you can
Yeah.
know what to risk in accordance with that. So the moment you answered statistics, I'm happy. I'm smiling.
Yeah, and I know we're running out of time here, but I always like to underscore that risk to reward is a post-trade conversation, oftentimes because one of the beauties of the market is we have no idea how long the market can go for. We have absolutely no idea. These markets have been absolutely preposterous. The Nasdaq hitting highs in what's about to be June is basically unheard of, guys. The Nasdaq's been around since like 99, something like this. It's 2000, something like this. It's been wild seeing us scream towards 20,000. It's been a crazy experience. So when I'm in some of these longer term trades, some of these longer term positions, and when I say longer term, I'm a scalper, guys. So if I'm going to trade anything more than 2 minutes, it's a longer term scalp for me, right? But if I'm in one of these trades and I'm sitting there and I'm looking at 5 minutes in on a trade, I'm thinking, geez, this is starting to extend a little bit. What'll happen if I hold it for 10 minutes? And when I try to extend that move and I try to hold things to 10 minutes, I'm always taken aback by how far the market can move. The NASDAQ in and of itself can move 100 points in 10 minutes. And that's since it's trading at 19,000, 18,000. That's really not much of a move percentage wise for that market. So there's a lot of opportunity to hold and gain these massive risk to rewards. That's why it's not uncommon to see people post things in Twitter, post things in chat saying, I just got a 20-hour move on this one trade. It's not something that you'll see every day. Not every trade I take is 20-1, but those types of trades can happen. So you have to be prepared for them. You have to be prepared to hold, and you have to be disciplined enough to cut things off. Not when you hit a predetermined risk reward, but when you see something on the charts that matches your process, that matches your system, and says, here's the place to exit. It's the beauty of the markets, man.
Yeah, fair enough. Look, I'll let you sign it off in the way that we do, guys. We've run out of time here to start your week on Memorial Day and obviously May Day in the UK and across Europe as well. They have a day to celebrate spring, apparently, Aaron. I've learned this today, but the UK have a day to celebrate spring, and that's pretty impressive, guys. Have a fantastic day. I'll throw it over to Aaron to sign it off in the good way that you do.
Thank you guys so much again for joining us here at TradeDelicious. Super excited to have had you as always for the rest of the day, for the rest of the week, for the rest of the year. Please trade well and trade delicious. We'll see you.